Hey everyone, welcome to today's show on Wealth Strategy Secrets. Today we're joined by a special guest, Jay Young. As the founder and CEO of King Operating Corporation, Jay Young drives strategy and vision for the leadership team with oversight over operations and client relations. An oil man at the core, Jay has been in the oil and gas industry for almost 30 years, and his family has been in the business for over 100 years. In addition to his duties at King, Jay hosts the podcast, The Jay Young Show, and is a Forbes Books author of The Upside of Oil and Gas Investing, wherein he breaks down the story and strategy behind the King investment model. Jay, welcome to the show, my friend.
Well, I'm honored, Dave. Thank you so much for having me on. This is really good. I love being on the other side of that mic.
Yeah, absolutely. No, really grateful to have you on, Jay. And I know, we have a ton of listeners in the audience who are existing investors into Fund One, a lot of people who are interested in this asset class and really our investment thesis, right? We're looking for assets that are non-correlated to the markets, right? We're also looking at assets that really live at that bottom level of Maslow's hierarchy. So real estate, energy, right there. And, it was really fortuitous that we had the opportunity to meet you guys a year ago now and really learn about the business model, which, supported our investment thesis. So really grateful to have you on the show. And maybe you can tell people who aren't really familiar, with Jay Young, tell us a little bit about how you got into the oil industry and, what do those 30 years look like for you personally?
Yeah. Okay, great. Thank you. I appreciate that. You're right. I mean, I grew up in the business. My great-grandfather, 4 generations. So my great-grandfather drilled wells in Pennsylvania, came down to Oklahoma, then Texas, ended up in a small little town called Coahoma, Texas. And in Coahoma, there's an oil field on the south side of the road. Right before you get into Coahoma, Coahoma's a real small town. It is east of Midland. So small town, but there's a big oil field on the south side of the road. My grandfather helped drill and operate all those wells for a company that changed companies a few times. But he was the guy on that oil field. But that was back in the 30s, 40s, 50s, is when they really finished up there. And then my great-grandfather had 12 kids. And if you're a man, you're in the oil business. And if you're a woman, you're married to somebody in the oil business. So kind of goes back. My grandfather and I spent a lot of time because he let me drive his pickup in the oil field, the old 3-speed on the column. And when I was 12, 13, I was tall enough to hit the pedals. So he let me drive. If I'd go out to the oil field with him, put an hour or two worth of work in, working on wells, he would allow me to drive. And so that was a given. And so then I went out there to the oil field. There's also a girl down the oil field road that I could also, when he was taking a nap, I could go by there too in his truck and act like I was big stuff when you're that age, driving a truck. But anyway, different story, Dave. So I kind of grew up in it. And in the early 80s, I'm almost 60 years old. I'll be 60 in January. So in the early 80s, when I went to college, oil and gas was very unpopular, very, very unpopular. So I got a degree in business, a BBA from Angelo State University out in San Angelo, Texas. And I didn't get an oil and gas degree because, like I said, oil and gas were real unpopular. So prices were down and everybody thought that we're never going to use oil again. It's not going to be a business. It's so crazy to think what my grandfather would think today if he knew what was coming around the corner, because everybody thought the oil and gas business was dead in the 80s and all the books written about the oil. There's a finite number of barrels of oil and gas demand and things of that nature. But so I didn't get a degree. So when I got to college in '85, my other grandfather was a stock market guy, Wall Street entrepreneur. So I'd read the Wall Street Journal, the Kiplinger newsletter. If people remember the Kiplinger, I'd read that. My grandfather gave it to me, and I'd read it back in college. And then when I got out, I became a broker, stockbroker, commodities for 5 years. And then in 1990, I went into the oil and gas business. And for 5 years, I worked for another company here in Dallas. And then I learned how to put deals together. So in 95, I started my own company and putting deals together. So I put deals together, oil and gas deals together. And then in 96, we started the operating company to operate our own wells. In 95, I was doing it for other people as an entrepreneur, buying deals from other people and putting them together. And then in 96, started my own oil and gas company called King Operating Corporation, which still goes today. We're an operator. We're an operator in Colorado. We're signing up for Wyoming. We're in Texas, Oklahoma, Kansas, Colorado, and we're going to sign up in New Mexico. We're looking at a deal right now for fun too in New Mexico, which is, I think, exciting. I won't get into all of the details unless you want them, Dave. Man, we can talk. I can talk for hours about it.
I know we'll jump in a little while. So no, that's really helpful to get to know you a little bit, Jay. And talk to us, because this show is also focused on wealth strategy, right? We're trying to help investors really build their wealth with an alternative strategy than Wall Street's promises. So, obviously you've done quite well. So tell us a little bit about your personal wealth strategy.
Yeah. Okay, good. Well, I tell you, the oil and gas business is a tough business. And so what we did was over the years, we put a deal together, we'd sell a deal, and then the oil would run out, and it's like, that's the end of it. So, kind of, didn't really build a lot of wealth in the 2000s. 2010 came, and then 2015, as I write in my book, The Upside of Oil and Gas Investing. I probably have one somewhere, but I'll be glad to send one to your listeners. Love for you to learn more about how to invest in oil and gas, because there is a wrong way to do it. There's 1,000 wrong ways to do it, and there's only a couple that retail investors can get into. That you want to split up your portfolio, diversify. So I was on a chairlift in 2015 in Beaver Creek, Colorado, with a good friend of mine, David Moore, who's also a real estate guy. He's an apartment guy, which a lot of your listeners are apartment guys. So I was on the chairlift with him, 2015. You can imagine 2008 and 9, people leaving houses like no tomorrow because they can't afford them, over leveraged, and going into apartments. The apartment business just exploded in 2000. Early 2010, 11, 12, 2015, I'm with David, and I said, hey, David, how's business? On the chairlift, Beaver Creek. And I said, he said, man, it's just unbelievable. I said, really? I said, man, and I don't know why I ask this question. Sometimes, the quality of your questions determine the quality of your results. That question right there, Dave, was probably 100 million, 200 million, I don't know, $1 billion question that I asked it. And I was real thankful that I asked that question. How do you structure your deals? And he said, well, we do the value, because you don't have only so much time with people, and I've learned how to structure questions, ask questions, and think about asking questions to people that are super, super successful. And I asked him, how do you structure your deals? And he said, we do the value add, where you buy an asset, we buy an apartment complex, and then you put money into it. You finance it, you find money to put the equity down, 30% down or whatever it is. And then you also raise some more money because you want to value add. You want to go paint the swimming pool or the entrance to the, maybe some of the roofs, or you guys know about this. And you value add. And he said, then after 3-4 years, he said, we will either sell it to somebody that wants it, want worse than we do, or they or more than we do, or we refinance it. And this guy has 30,000 doors now or something. But anyway, I've learned a lot. But in 2015, so I came back to Dallas, and I pulled my team together. I got an SMU guy that's a CFA. I've got a Rice MBA. I'm like, okay, guys, we got to find the right product at the right time. We've got to put this deal together, because we're going to start value adding like apartments. And these guys just looked at me like, what? That's not the oil and gas business, Jay. This is how you raise the money and you get, no. We're going to do this different. because nobody does this. Nobody in our industry does this like this. I want to be the first one. I want to be the guy that just kills it. I want to be the guy that investors just can't get enough. And so they're like, okay, all right. So we found a deal in Scurry County outside Midland on the eastern shelf of the Permian Basin. And it's a deal that we raised $6 million from investors. And then we increased the value in 1 year, sold a third of it for $8 million. Wow. Okay. Tell me more, right? I mean, hey, it's like, okay, so clients have all their money back. They took the tax write-off. The 8 million probably should have gone into a 1031 that I should have put together. But anyway, so they got the write-offs, they were getting income, and they got a scalable investment. They got their money back in some in 8 months, some in 13 or 15. I think 15 months was the latest or the longest. Some guys 3 months, 4 months. My guy in Denver that I'm going to see this weekend, Larry Mueller, put in $600,000. I sent him back 800,000 within like 3 months. But anyway, I was like, wow, that is really a great way to do it. So we increased the value, and that was one of our assets in Scurry County. Did Scurry County 2, and then 3, and then we put all those together, and then we did a Howard County project, and now we're doing Fund 1. But what we do is we just put enough assets. I'm buying assets just like you guys buy apartments, or buildings or something. And I'm putting 5, 6 in each one. So like in Fund 1, we have Wyoming. We're going to spend 10 million, maybe $15 million in Wyoming this next, 6 months to increase the value. In Colorado, we're going to spend $1 million more in Colorado by doing 3D seismic to increase the value of Colorado. In the Mid-Continent area, we've drilled 2 horizontal wells that are producing 30-40% revenue streams. Extremely powerful. We're drilling 5 more wells there now, 5 more vertical wells, and 2 more horizontal wells there this year. So that means we're going to spend, $25 million there to increase the value of that project. In West Texas, in the Permian, I should have brought a map, Dave, just to kind of show you. And I've got them in the conference room with my guys. Permian Basin, the 2 wells east of Big Spring we have there, those are 2 Wolfcamp, powerful. Those wells are going to come in at 1,000 barrels a day and about 1 million, maybe 2 million cubic feet of gas a day. Good revenue stream for investors. And then the 2 Cotton Valley wells are going to come on at 3-4 million cubic feet of gas a day. Hey, and those are all paid for your investors. Every investor that's on that, you've already paid for that. You just haven't gotten paid for it yet because we're going out there and drilling these wells. It's different than the apartments. I mean, apartments, you buy them one day, you get a check the next, kind of. I mean, it takes.
Right. So maybe, yeah, that's great, Jay. Maybe you can elaborate a little bit on what do the assets actually consist of, right?
Yeah.
In the fund. I know there's a lot of kind of questions and people are new to this asset class. So what does that, consist of? Everything from, the land leases to, if you can go into that.
Yeah. So we don't buy the land itself. We buy the leases or the mineral rights in order to drill. So let's just look at Mid-Continent. So what I liked about Mid-Continent, and it's let me see, it's about 80 wells that hold 640 acres. Okay, so if you just do the math on that, that's 80 wells that hold 640 acres. That's like 51,000 acres of land lease wise. Okay, so you look at that and you buy the leases, and then so each vertical well holds 640 acres. Okay, so we buy the wells. I believe there were 60 instead of 80, but let's just say there was 60 wells that hold 640 acres. That's like 30-something thousand acres of land that we have. So that is in the fund. So all those 60 wells are producing income. Okay, a little bit, not a lot, but a little bit. And then you have the land capable of producing, because some wells, and if it's on 640 acres, you can drill you can downsize and drill one well on 640, drill 2 wells on 320, so you have 2 wells, and then go to 160s, 80s, and then so forth. So you have each one of these assets that are on their own. And we can talk about Fund 3 or Fund 2 in a second, about some of the deals we're looking at in there, same thing we're looking at here. What's the upside? So when there's no bigger upside in any investment that I am aware of than drilling good oil and gas wells when prices are good. We can have our project, you know, where we raise $80 million and then we can drill wells. It's worth $200 million overnight. So each asset has value add. We don't look at a deal and say, okay, well, here's a project and it doesn't have any upside. We want to make sure there's upside. So we look at it like Mid-Continent, like Wyoming. The great thing about Wyoming was there was a lot of locations in Wyoming that we have over 100 locations that we can drill. Okay, does that make sense? A drillable location?
Yeah, that would make sense. And maybe you can articulate a little bit more, what is the value add? So again, you know, a lot of new people into this asset class. So what does that mean to you in terms of value add?
Okay, so like in Wyoming, we have the project there. We have 3 projects we're getting ready to do there. Sitting ready to spend $200,000 perforating the well that we have, that one zone, Phosphoria. And then we have 2 wells we're going to drill. So even though there's a lot of offset locations, like in the other project that we had, there was 40 wells, 40 vertical wells drilled out in this area, and all of them had produced like 25,000 barrels of oil. Okay, but they're vertical wells. You know, there's like all these vertical wells. You know, think of Coke cans sitting on a table and spread them out. There's vertical wells that go down. They penetrate the surface at 6,000 feet, let's say, and all of it produce some oil right around that wellbore. So what we do is we look at the math and look at that. That's what we're doing just a second ago. Look at it and go, wow, that's great. Let's go horizontal right in between all of them. Because if there's oil all around you, there's going to be oil in the middle. And so we want to drill horizontally right in the middle of that and go all the way out to the end and say, okay, we're going to drill a 5,000-foot lateral. So we look at one area and say, okay, we're going to buy the Borden County project. We're going to buy that for $10 million. We're going to spend drill 3 wells at $5 million. And then that's $25 million. That project will be worth, because what they do then is the land is only, you know, $2,000 an acre or something like that. But if you drill wells and you're producing hydrocarbons, that's when you get multiple on your investment. You get 3 to 1, 4 to 1. So that's probably going to be worth $75 to $100 million then, just by drilling those wells in that area. Okay, so drilling wells is the way to increase the value. Like the $80 million we have right now that we're going to spend in Fund 1, we're going to drill the 2 Cotton Valley wells. We're going to perforate and drill 2 wells in Wyoming. We're drilling 2 more horizontal wells in the Marminton. Each time you drill a well, it increases the value. And it's like an appraisal on a house. You know, you get an appraisal on a house that's worth X. Well, same thing in a fund. You know, the engineering firm, third-party engineering firm, has a value of our fund, and then we look at it and say, okay, now we've drilled these wells, and they go, okay, well then there's more value there. So every time you drill a well, it adds value. It adds value for not only the location that you drill, but also the offsetting locations. So if you drill a horizontal well, and let's say there's and I think this is an explanation. If I had maybe I could show this on my project here, but if you drill one horizontal well, let me show you this. If you drill one horizontal well, so if you're drilling a horizontal well, all right, you know, this is the surface here, and then you drill that well 1 mile long lateral. Let's just say drill 1 mile long lateral in one location. Okay, so that is drilling one horizontal well. If you had a bird's eye view, or in Dave, your helicopter views. I know you like helicopters. So let's just talk about that. So then you You drill one well horizontally, 1 mile long lateral. And then now, if you take that to the bank and you say, hey, I drilled this well, it cost me $5 million. And they say, okay, a reserve report will give you probably about $10 million value for this location, but they'll also give you locations on the other side of this. And they'll say, okay, well, hey, you know, you've drilled a well and you've proven that there is oil here. Well, I'm gonna give you, this is called a PUD, which is a proven undeveloped location here and also here. So if they say you're going to produce 500,000 barrels in the middle, we'll give you, the SEC allows you to record and say we have 2 locations right offsetting that one well in an unconventional reservoir, saying if you produce 500,000 barrels in the first one, we'll give you value on the next 2. So that gives you 20 million. So we say, okay, hey, we got 500,000 barrels on 3 wells. The total value is 20 million. That increases your value substantially. We're doing that in the Reed project in the Permian Basin right now. In the Cotton Valley, we're doing that. And we're going to do that in Wyoming, drilling those wells. We increase the value. So we increase the value of the project. So our goal is, after we drill the wells that you'll see on the Insider, or we can do another, I can show you more about where we're drilling. Those wells, the value of the fund goes from 80 million to 200, maybe $300 million. And when you increase it, not about the price of oil. You know, if the price of oil goes to $200 a barrel, that's gonna be worth $3 billion, right? I mean, it's crazy. If it goes to 40 or 50, it's not gonna be worth as much. If it goes to 70, if it stays at 80, $90 a barrel, that 80 million will be worth $200 million. And our goal is to take that, split it down the middle, sell off $100 million worth, and give clients their money back. If there's a buyer for this asset, this will be first quarter, probably second quarter next year. We're going to take this project to sell, because this is the way people can make money in oil and gas. You put money in oil and gas, you get 100% tax write-off, you get monthly income. But if you don't get your money back, then you're not making a multiple. No way you make a multiple. So that was my goal of, hey, let's put this asset together. Let's hockey stick the project by drilling good wells. And then after we drill the wells, your value goes from 80 million to 200 million plus. But let's sell $100 million worth to give clients their money back. Because then they go, okay, great. Now I like it. If there is a market, if there's not a market, they'll continue getting that monthly revenue. Everybody likes monthly revenue, and we'll continue that monthly revenue from the 14 additional wells. You're getting revenue now from the 2 and the legacy production, 14 additional wells, which will increase your monthly revenue check.
What if everything you thought you knew about investing was wrong? Would you like to create a wealth strategy like the top 1% have, and get exclusive access to top private equity deals that provide downside protection, tax efficiency, predictable cash flow, and have a lucrative upside? Discover how with the Pantheon Advantage, and join our investor club today at pantheoninvest.com. Right. No, that makes sense. I appreciate that. Let's talk a little bit about PDP versus PUD. And, you know, I think a lot of people who have invested in this industry in the past have gotten burned, much more speculative type investing in oil and gas. So talk to us a little bit about the makeup of PDP versus PUD, and what those actually mean for people, and how your fund is different.
Yeah. Okay, great. Good question. The big thing, I think, when somebody says, and I invest in oil and gas, I lost all my money. And I said, well, you probably had some promoter that came out and said, hey, we got this well, we're going to drill, and it's a 5-to-1 return, put up $100,000, and you can either, you know, and those deals are so speculative. You'll never see those sold to oil and gas companies. They're promote deals. I mean, they're just, you know, they're deals that won't make any money. the promoter's probably making the money, but that's it. Nobody else making any money. So what we designed is we're buying PDP, which is producing properties, literally producing, like apartments that spit off revenue in the rents. We're buying PDP, but we also buy PUDs, which is part of our strategy. Is we'll buy PDP, and then we'll also buy PUDs or locations to drill in the future. So, hey, our goal is to buy enough PDP. If we can find it, it's hard to find, but also buy some PUDs or locations that we know that we're going to hit when we drill, and then raise the equity to go and drill those wells. And that's how our investors make money, because they're not investing in a one well deal or two well deal. This is all scalable, and we have scalability. That's why we liked Wyoming so much, was because they had 100 locations, no dry holes. Devon's been out there for drilling a tremendous amount of well. It's produced a couple of TCF of gas. It has produced oil and gas. It is so different. And you can't really talk about, some promoter that's got a deal, a project, and go, oh yeah, well, I got a well that we can invest in, and talk about one of our deals. It's like night and day. It's not anywhere close to being the same. So when somebody says, well, you're just a promoter, and I go, man, you have no idea what you're talking about, because you don't. I mean, I'm sorry, you don't. If you're looking at me and looking at my projects and looking at what we do, it's a multi-million-dollar project. Fund 2 is going to be an incredible project because of the deals that we're looking at.
Yeah. So what would you say, Jay, is the biggest risk in your mind, right, for investors who are coming into this and again might be new to it? What are the biggest risks you see?
Oh, so the biggest risk for the fund is oil and gas prices, right? I mean, if it goes down to $20, $30 a barrel, which I don't know if it ever will. I don't know. But I don't see it ever going down. But if it does go down to $20, $30, then there's going to be a challenge. If it stays at where we are today, we're gonna kill it. But I mean, we can have wells in the BLM, or we can have, which is British Bureau of Land Management, with which is harder to get. The government's shutting us down, on permits, or ESG and all these other people that it takes longer to drill wells, but we're not really in those areas, but it's all about supply and demand, and it's all about, like right now, prices have come down the last couple of months. Hey, great. I like it. I mean, I'm not a seller right now. I'm selling oil and gas crude, but I'm more drilling than I am, and I am producing. So my deal's a 2-year, 3-year deal. Don't worry about your check this month, because your check this month is going to be down, and next month it's going to be down, because we haven't drilled all our wells yet. We're raising the equity necessary to go drill a bunch of wells. So our revenue checks are going to be down the next 3 or 4 months. And nobody has a bigger investment than I do. So yes, there is. Matter of fact, there is one group that just came in for another 4 million. They do have the third group. They're not an individual. I'm the biggest, largest investor, one investor, with over $3 million. I'm one investor. This other guy, they have more than that, but they have 2 guys. So, but I'm just saying, oil and gas prices are now. If prices do go down, Dave, how bad is it? I mean, they're going to shut us down. They're going to lose all their money. No, we'll still produce the wells. We'll still produce the well. I mean, if it goes down to 20, 30, we may have to shut some in, going, but not economic. But we'll still produce the higher producing wells, and so clients will still receive revenue checks, even at lower prices. And there may not be I'm assuming when I say that we're going to sell half the fund second quarter next year, that prices are high, or not high, but just not $40 a barrel. And there's people out there still buying, and I know there is.
Right. And what do you think, I mean, from a geopolitical perspective, right? Obviously lots going on, but what are your thoughts on this?
Well, at the end of the day, we're going to need oil and gas. We're going to need oil and gas for a long time. So I don't really, we're talking about that on whatever channel that was, Fox or whatever it was the other day. And somebody was asking me, and I said, you know what? I said, the government's gonna do what they need to. And I feel like right now they're keeping prices down. They're unleashing a tremendous amount of strategic reserve right now to keep oil prices down, gasoline prices down for this election. But wait till after the election in November, December, January, prices are going to go up, and they're going to, I don't know where they're going. I'm buying as much as I can right now because my goal is to, have more production and so forth. But I want to get as many deals on the table right now as I can, because 3 months, 6 months, it's going to be crazy.
Yeah. Yeah.
Prices are going to go up, supply and demand.
And tell us a little bit about the mix of oil and gas, because again, I think people are kind of new to the asset class and don't really understand, right, the mix and the hedging strategy that's going on there.
Yeah, so we have 3 different assets that when we drill a well, we could produce at any one time, and it's all about the area. Like in the Barnett Shale, Fort Worth, that is all gas, natural gas, period. If you drill wells in the St. Andrews Formation or in Colorado right now, it's all oil. It's water driven, not gas driven, but it's all oil 100%. If you drill wells in West Texas or any of the other places we drill, pretty much, it's gas driven. So you have oil that you sell natural gas, and you sell NGLs, which is natural gas liquids, which means that it's a gas. It's an oily gas, so they have to strip the liquids out and all this stuff. So it's a kind of a combination of natural gas and oil. But any well, it matters how much well control you have. And I feel like I'm a closeology. If you say, are you a geologist? No, I'm a closeologist. What do you mean? I drill close wells that have already produced. That's what my gig is. I know don't tell everybody, babe, but no. But I just like drilling next to wells that have already produced. And so we pretty much know what comes out of the wells, but the majority, I say majority. Right now we have a pretty good mix with oil and natural gas. We bought some of that natural gas stuff that's in our legacy production at $2, $2.20, $2.20. It got up to $9. I think it's down to $6, $7 right now, but now that has tripled, quadrupled in price, where the price of oil, was $50, $60, $70. It might have doubled for a little bit, but natural gas is where it's been over the past couple of years. Natural gas, and they're a lot easier to drill, and they're a lot easier to operate than these high-powered oil wells. But they're still great.
Right. And any impacts you see from what's going on with the war with Russia and Ukraine, and how that's impacting Europe right now, especially on the natural gas side?
Yeah, I'm really surprised at the increase in what we're going to have when you talk about LNG, when the LNG market's going to increase. Somebody was saying, I went to a conference yesterday in Houston, and they were talking about like 12, 13 Bs today. It's going to be 40 billion pretty soon a day that's going to be shipped to other countries like Europe and Ukraine and countries like that, or Germany. They had bad policies 10 years ago. That's what we have right now. We have bad policies that are going to hurt us, 5, 10 years from now. That's why it's great to get in the oil and gas business now, because I don't feel like there's a way where oil and gas prices are not going to go up. They will go up in the future because of bad policies. But we're going to supply natural gas to a lot of different countries, which is good for everybody.
Right. So Jay, I know we're rolling out Fund 2. Everyone is super excited about really this opportunity, the business model, especially the timing of this, to really be able to take advantage of tax advantages before the end of 2022. Can you share with us some of the highlights about Fund 2 that you're most excited about?
Yeah, I'm excited because we're looking at some incredible projects right now. The markets the markets, I was listening to some of the guys at Public Company the other day with Chesapeake, and they were talking about the markets are pretty dried up right now. The financial markets, people are trying to get, there's a lot of deals out there, is what I'm trying to say. We got great deal flow right now, and we're looking at some incredible projects that the investors can participate in right now, because they receive not only the 100% tax write-off that we're totally excited about, but also monthly income. You know, having that monthly income that people love, which I do love that. Everybody loves that monthly income. But also, you know, as we scale this investment, we're looking to build a $10 billion company with you guys, with everybody involved, and be a part of it today. You know, and what we're doing is, by mitigating that risk with drilling different projects in different areas. You know, we've got the Wyoming project that is, we're drilling wells next to wells that have already been drilled up in the Wyoming area. We're looking at Borden County, which is a really great project that we're excited about, that we have our fingers in, that we have bought, and we're getting ready to drill a well right now, getting started there. The Mid-Continent area, and also the Eagle Ford area and the East Texas projects that we're buying. We're finding properties like this one property right now that I can't tell you everything, because I don't want anybody, one of your listeners, to go negotiate this deal with me, but let's just say it's in X, okay? And they're going to give us time. It's like 22,000 acres, and they're giving us time to drill 1 or 2 wells, and it's right on the shelf of some of the biggest oil and gas producers in the Eagle Ford, you know, with the Austin Chalk and the Eagle Ford formation. I mean, these are big, huge wells, and they're expensive to drill. And we're trying to, and I believe we can, negotiate where we get in for a little bit of money, but they tell us, okay, it's kind of like a farm out, you know, where you come in and you drill wells, and you don't spend $10 or $15 million on acreage up front before you even drill your first well. These are projects that we have, you know, the Weyerhaeuser in East Texas, the Wyoming project, you know, this other project I'm talking about right now. You know, projects that you have that you can go in, and I'm talking to Chesapeake about their some of their acreage in the Cotton Valley, which is above the Haynesville. They're drilling the Haynesville. We want to drill the Cotton Valley uphole. They're not going to drill it because it's not big enough for them, but it's good economic sense for us. You know, so we're looking at some of those projects, and we're staying really excited. Our key guys in these assets are continuing to look for deals. Not only look for deals, but as we look for deals, we not only look for deals, but we find these deals, negotiate these deals. You know, not as much money up front, because then all the upside is in your drilling. You know, so really excited. I know that's a long answer to your question, Dave, yeah. But I am really excited because we're in a great arena right now where we have some great partners like you that have come into our investment that we're able to build off of. I'm a big investor in this. I'll be a bigger investment in this next project. I'm really excited about it. And I tell you what, at the end of the day, it's all about risk to reward. And it's also about, you know, how can we mitigate that risk? And somebody was asking the other day, they said, well, are you going to go get a bunch of financing? And, you know, we hear all about, you know, big financing and you know, people losing companies and their G&A gets to, no, hey, what we're doing is a great way to do it. You'll see Fund 1, you know, we're going to sell a part of Fund 1 pretty soon, or probably by the summertime. You'll see a big chunk of money go back to the investors, hopefully all of it, you know, and then we're going to use some low cost debt just to keep things going on route to 10 billion. So, hey, you know what? No other firms out there, oil and gas companies. I'm talking about the big firms that are selling through broker-dealer industry, RAs. They don't talk about 10 billion or a $20 billion company. They don't, because the investors have no part in it. They don't have any part in it. And we can talk about the wellbore only and all that, but just to let you know, that's why I wrote the book, The Upside of Oil and Gas Investing, to let everybody know you're a partner of ours. Everybody here is a partner of ours en route to that that 10 billion. And that's what I'm excited about. I'm more excited about that and how we've structured our programs. I'm taking a Harvard business school now, about alternative investings. The reason why I'm doing this is because, man, I'm doing this for you guys. I want to have that best product available so you guys can understand, hey, what is it? And I know that, hey, if I had a little bit of extra money and I want to diversify into oil and gas, hey, Jay Young, King Operating, that's synonymous with, hey, we're going to treat you right. We're going to treat you right. It's not about us, it's about you. We appreciate all of you, and the structure of the deal is so important for you, the investor. And that's why you should read my book, and you shouldn't do business with anybody else except me and the oil and gas. But now I'm not saying don't do business with me. I'm not trying to oversell myself. I'm just saying, look at the structure of the deal. And it's so important, Dave. And you know this. I mean, man, you're in the real estate.
Oh, yeah.
You've made bazillions in the real estate business for people, and we're doing the same thing in oil and gas. And it's so important.
Yeah, no, really appreciate that sentiment, Jay. And, we've now had almost 6 months of operating, time, working with the King team. And it is really, great to see that sentiment that you have around, taking care of the investor first, right? And building your business with the individual investor as partners. And you're right, that is very unique to the industry, right? Where people are just raising money through institutional means, right? Which is a very different game. So you guys really take to heart, right, the investors, and then having that mutual alignment with investors, which is, one of our key due diligence items. So appreciate that thought, Jay. And then one final question for you. If you could just give one piece of final advice to investors on how they could actually accelerate their wealth journeys, what would it be?
Good question, because I look at wealth in two different ways, right? Monthly income, passive monthly income, but also, I was reading, about, I'm trying to figure out how I got there, but live off of 20% of your dividends and reinvest the other 80%. I believe in that. You got to make money, you got to have passive income, but you know what? If you take 80% of your money and you put it back into assets that are generating you income, don't just keep it in cash. The stock market's not necessarily a friend of ours anymore. It's so up and down, and things are so overpriced. But in my opinion, I would invest with Pantheon. I'd find some other people to do the different types of alternative investing, and I'd put 80% of that money back to work investing. That's the biggest advice that I have. But I've learned, and that's what I do, and I'm real excited about that.
Yeah, absolutely. Well said, Jay. Really appreciate you coming on the show today, Jay. I think it's been very insightful discussion. It's a new asset class that's getting a lot of attention, and I think the timing is really now for this asset class, and to diversify into commodity, and also to be working with such a unique team, right, with such a unique business model in the space. And that's how it's kind of aligned with us. So again, grateful for the opportunity. And if folks would like to get a copy of your book, what would be the best place to do that?
Yeah, go to our website, kingoperating.com. You can also go to upsideog.com, upsideog.com, and fill out a questionnaire. And if you qualify, I'll send you a brand new autographed copy of my book. I have no problem with that at all. Appreciate you there, and we do a lot of social stuff, or not a lot, but do some. But the best way is just go to our website, kingoperating.com.
Excellent. And if people would like to invest in this opportunity, they can definitely reach out to us at pantheoninvest.com to learn more about this opportunity. Thanks again, Jay.
Thank you, Dave. Appreciate it. Man, I love having you, man. I love being on your show, and look forward to working together. Again,
Likewise. Thanks, Jay.
thank you.